living in Massachusetts with $4 million in assets could eliminate their estate taxes?
So, yes, there has been some changes. Now we're almost a full year in, of course, heading into a second year into the change. The change is now $2 million. It used to be $1 million for estate tax exemption. Now it's up to $2 million. And yes, if you are married, but you actually do trust planning, you can shelter $4 million. But folks, that doesn't mean that's all you do. For folks with $3 million that want to eliminate taxes, we can do that. But we can also think about protecting assets from the cost of long-term care. It allows us to do both a little easier now with a higher estate tax exemption. So think about ways in which you can use the irrevocable trust to not only shelter and be able to reduce your estate tax by sheltering up to $2 million on the death of each spouse, but also starting that important 5-year waiting period running to protect those assets from the cost of long-term care.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide. It's called Balancing Asset Protection and Avoiding Estate Taxes. You can call 866-848-5699. That's 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you here on a Monday. It's a pretty quiet week, quite honestly, and so if you're recovering from a little bit of overeating on Christmas, as I've been known to do, then we're in the same boat, and we can just kind of take it easy. We do have some economic data that comes out this week. Case-Shiller Home Price Index will be out tomorrow, along with the FHFA Home Price Index. We're going to be getting Fed minutes tomorrow as well, and then Wednesday we are going to be getting some jobless claims. But overall, just a pretty quiet week, and a nice way for us to digest our food, digest 2025, and get ready for 2026, which 2026 trading starts this Friday. It's going to be one of these weird things where you have one day of trading in the new year, and then hey, take another 2-day break because of the weekend and really get into it on Monday the 5th. But in any case, there is still some stuff that is moving around and some things that I think are worth talking about at this time of the year. Things that are not worth talking about. 2026 S&P 500 price targets, useless. Don't care. Not going to do it. So we're going to skip over that. But what I do want to discuss is we are going to have a new Fed chair in the first half of next year. The actual timeline for this is Powell's term is up in May, and so in theory he's going to finish out his term. I think he will, just because I think he views it as something that's important, but we're very likely to get an announcement on who that next Fed chair is going to be sometime in January, and at this point, I think we've got the two Kevins are in the running. We've got Kevin Hassett and Kevin Warsh. Waller is in the running. Chris Waller, who is where is he, the Fed governor? Or is he just on the,
He's a governor.
He's a governor. I can't remember which one he's a governor of.
I don't associate them with the geographic. That may be the case. I just think of governors as floating. as opposed to presidents of Fed banks who are
Oh, okay, he's a governor. I'm sorry,
associated
I meant he was a president. He's not a president.
No,
he's a governor.
he's a governor,
Okay.
right.
So those are the three names that have been bandied about. I still think there's an outside chance, wee little chance, maybe, I don't know, 10, 12% chance that Scott Bessent, current Treasury Secretary, ends up in the role. But this is kind of where we are right now, is there is going to be a new Fed chair about 5 months from now. And there's a piece in the Wall Street Journal how investors are preparing for a new Fed. How are they preparing, Marc?
Well, I think you have to think about this in terms of what the Fed's job, if I may, I don't want to go on a diatribe here about the Fed being compromised. Maybe we should get into that because it's unavoidable and it directly impacts financial markets. But first, remember what the Fed does. It's the economy's thermostat. The Fed it's useful to think about the Fed as controlling demand before inflation. So the Fed can control the growth rate of the economy. I'm oversimplifying a little bit, and a monetary economist would slap me on the wrist for this, but just think about it that way. In demand overall consists of an inflation component and a real or an after-inflation component. But so the Fed, because it can print money, it can effectively control, again, I'm oversimplifying, the rate of inflation. Things can get out of hand as a result if the Fed is too lax with respect to one component of its dual mandate, which is to keep inflation low and stable, which the Fed defines as 2%.
Sure.
That's still the Fed's job. It's important, I think, to keep that in mind. The reason I opened with saying, well, the Fed is compromised is because the administration doesn't care about the 2% goal. They've made that clear. The administration wants the Fed to just print a lot of money. When they say they want interest rates low, that's synonymous with printing a lot of money. To the extent that influences inflation expectations, which are elevated, you've got a problem. And to the extent that feeds into demand and pushes demand above the economy's productive capacity, you've got a problem.
Let me ask
an inflation problem.
Let me ask you a question, because this is one that I'm sure listeners are thinking right now. Previous presidents have made similar, not the same type, but have similarly tried to jawbone the Fed into moving rates lower.
Not in the modern era, not since Clinton.
Well, I was going to go back even further. I mean, Clinton and Johnson are the two examples that I was going to give that are well-known.
Clinton was a good example. Johnson a bad example.
But, so yeah. I guess my question on this is, we've seen this previously from other presidents. Is there a difference here in terms of how you view that the Fed could be influenced? Because, again, previous presidents, again, Johnson did, Nixon certainly did.
And what happened after that? We had the great inflation.
Correct. I guess, do you draw a straight line from point A to point B, or were there exogenous factors that contributed? I mean, especially with Nixon, I don't know that Johnson was a Fed thing.
Yeah, Johnson needed to finance Great Society in the Vietnam War.
Correct.
So we had easy fiscal, easy monetary policy. Inflation started to pick up in 66, 67. Then we were off to the races. We had two oil shocks in the 70s, just exacerbating things, but the trend was up. Nixon, similarly worried about his reelection, appoints his buddy Arthur Burns, who was the preeminent business cycle economist
very
of the day.
well regarded before his time.
He was brilliant.
Yeah.
Right? Spent a lot of time doing forecasting. Effectively invented the concept, along with a couple of other guys. I say guys generically; they happen to be men of business cycles and forecasting them. Johnson and Nixon broke the Fed. It was already tenuous because it was still new. This idea of independent monetary policy. Trump's going to break the Fed again. He arguably already has if you look at inflation expectations. And we're going to have to relearn the lesson of the importance of independence and Fed credibility all over again.
Let me ask you another question then. Because there's an assumption, I think, embedded in this. Let me ask you, is there an assumption embedded in this that whoever is the Fed chair is actually going to follow through on what President Trump is explicitly, again, in the last week or two, explicitly saying, I want someone who's going to lower rates.
I don't. If you look at how and this goes a little bit beyond finance, but he's getting his way in other areas. You could say you think that's great, or you think it's not great. I'm not going to comment on that.
Sure.
But if he wants it, he's getting it. He's being a very aggressive, empowered, energetic chief executive. I guess I have to take a bit of a leap and say I find it hard to believe whoever he puts at the Fed is not effectively a puppet. And a puppet sounds derogatory, but I think Trump, if you asked him, he'd say, yeah, I want a puppet at the Fed.
This leads me to my final question that I think will get to where I'm really going with this, and then I will conclude my opening argument. Scott Bessent.
Yeah.
The year before he became Treasury Secretary, was very publicly criticizing Janet Yellen, who was Treasury Secretary at the time, saying, I don't like how she's managing the mix between short-term bills and long-term bonds, wrote multiple white papers on this and, was on different news networks, talking about this and so on and so forth. Comes into the position of Treasury Secretary this year and has kept doing exactly what Janet Yellen was doing, because he looked at the situation and was like, yeah, of course I'm going to keep doing this because I want to keep my job. I guess my question is, regardless of who comes in, whether it's one of the Kevins, whether it's Bessent, whether it's Waller, whoever it might be, whether it's someone who we haven't mentioned yet, which I don't think is the case because it seems fairly far along in the process now. I believe that to a certain extent you get into that chair, whatever the chair is anywhere, and once you realize how much power you have there at the helm of the U.S. financial system, despite your previous thoughts to the contrary,
maybe
you generally tend to be like, yeah, I guess I really can't, push that button the way that I want to. What happened with Bessent, I guess, is what I'm getting at. Is Bessent, the whole year last year was, I can't believe Yellen's doing things this way. I can't believe she's doing it this way. And then he's basically done the exact same thing. And so part of me looks at this and says, I know that, there's this thought that, hey, whoever goes in there is going to, harm the Fed's independence and their credibility. But I guess part of me looks at it and goes, I'm not so sure based on what we've seen from Bessent during this administration as well.
Maybe he pulls like a Thomas Becket, if you've ever seen the movie. He was made Archbishop, and then he started bucking the king, and a great, Peter O'Toole movie.
Yeah.
So maybe he does, and then, of course, Trump pulls a Henry II on him. I don't see the president, and if you haven't seen the movie, you may not, or read about this episode, you may not get that. But the point is, my guess is the president has been fierce about imposing loyalty in his will. Do you think he'll brook a Fed chairman bucking him? I don't. He'll find a way to fire.
Well, he has with Powell, and he appointed Powell.
We know he was on the brink of firing him a couple of times, and
but
Bessent and others walked him. Who's going to be there to walk him back this time? If Bessent decides Fed integrity and independence is too important to the stability of our financial system, I'm sorry, Mr. President, I can't lower interest rates to zero with inflation at about 3% and economic growth seemingly above trend. I don't think the president is going to this again gets way beyond economic analysis, but you've got to look at the way that the president has behaved in other areas. He does not brook opposition. He's fierce about imposing loyalty, about demanding loyalty. Will he suddenly respect the Fed's independence because it's his guy? Powell was his guy.
But that's what, I guess what I'm saying is Powell was his guy. He said, I don't like him anymore, but he still hasn't moved on from him.
I don't think he's going to make the same mistake twice.
Interesting.
What in his view is well, look at how the president's behaved in other areas. He feels very empowered. Yep. Why would he stop at the Fed?
Let's take a quick break. When we return, let's talk a little bit about labor market expectations in 2026.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're retired or getting close, now's the perfect time to take a fresh look at your estate plan. Doing your planning early can help you protect your assets and keep more of your wealth in your family. Cushing & Dolan, the leaders in elder law and taxation, have put together a new guide called Balancing Asset Protection and Avoiding Estate Taxes. And in it, you'll learn how to secure your assets if you ever need long-term care, how to avoid having everything tied up in probate, and how to get a clearer picture of your estate tax exposure. The guide also breaks down real options that may help you reduce or even eliminate your estate taxes when you plan the right way and plan early. Whether you have an existing estate plan or starting from scratch, this guide makes it easy to understand what steps could help you and your family in the long run. To get your free copy, call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederickstead comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is powered by Circle K Convenience Stores. Circle K is now the official convenience store of the DAV Department of Massachusetts. On behalf of Circle K, thank you, veterans, for all you've done.
Piece in the Wall Street Journal. It's the French language Wall Street Journal that I can't read because I don't speak French. I always struggle with crossword puzzles because of that. You know, like each crossword puzzle has like at least 2 or 3 French things in it, and I'm looking at it, I'm like, don't know, have to skip the clue, maybe hopefully get it on the cross. I have no chance in those, but whatever. Companies, they're outlining their hiring plans for 2026. They don't look very good. And this is meshing with the real-time data that we are continuing to get on the state of the labor market, which in my opinion, which might not be worth the paper it's printed on, but usually it's worth at least the paper it's printed on because paper's pretty cheap these days. U.S. labor market continuing to slow. The latest data that I have here, and this is from a week ago, but, and again, like, you have to take this with a grain of salt just because year-end numbers always get a little wonky because of holiday schedules and floating holidays and things like that. But when you look at the current state of FICA tax withholding relative to last year, this is the trend that we have been on now over the last 6 months. July of this year saw a 7.4% year-over-year increase in FICA withholding. And why this matters, okay, like why I think this matters as opposed to like some of these other measures, ultimately FICA withholding measures one thing: how much income tax are employers and employees withholding on a regular basis based on the actual wages they are paying. Specifically, wages under about $160,000 because that's where the FICA cap is. And like, it's basically how much money is the normal person in the United States making? How much growth are we seeing in that spending power of 310 million people as opposed to, the 20 million that make north of that or whatever that number is? So in July of this year, FICA withholding growth was at 7.4%, which is pretty robust. Like, it's pretty good. Like, generally, if you see anything historically, like the last 10 years, if you're running like 5 to 7% growth, you're fine there. Like, that's where you want to be. So 7.4, you're like, okay, this is pretty good. August slows to 7.2. Negligible change. Honestly, if you just had like that little wiggle, you shrug it off. October, down to 4.3%. I'm sorry, September, down to 4.3%. October and November, you have to aggregate them because of when Halloween fell and end of month this year, but whatever, you can do that. Down to 3.8%. You could look at that October and November number and say, yeah, it fell to 3.8, but maybe that was because of the shutdown, because that did have some delays in, certain payments there, and government contractors might not have been getting paid during that time, and so maybe they weren't paying their employees. Whatever, you can kind of like hand wave it away. December through December 22nd is running 0.5% year-over-year growth, which, in my opinion, is below stall speed. And the reason that I say that is, remember, this is the time of year where most employers are giving raises, but in reality, raises happen all throughout the calendar year. And I don't know what kind of raises anyone listening may be receiving. Maybe you're retired and this is not, something that's relevant to you anymore. But in general, what we see these days, I think anywhere from like a 1.5% to 2.5% raise is kind of standard throughout most companies. I think so. If we want to call it 2%, let's call it 2%. Plus, you have people that are switching jobs, and when you switch jobs, you're typically not switching to a lower-paying job. You're typically trying to move to a higher-paying one. And so I generally think the baseline, if you have, like, no job growth, which, by the way, is kind of what we've seen the last few months, is, yeah, you should still be eking out, like, 3 to 4% in payroll tax withholding, because that's kind of the natural order of, yeah, most people are getting, 1.5 to 2.5% raises, and if you're taking a new job, you might get like a 4 to 5% bump, and so you end up, in my opinion, with like 3 to 4% FICA withholding growth being a baseline for no job growth. That's how I get there, at least. If we are, in reality, seeing anything near only 0.5% FICA tax withholding growth year over year, it suggests to me that the pace of job growth has turned negative, or that the only way people are able to maintain jobs is by getting laid off and then taking a lower paying job in order to mitigate the damage, which also is not great for spending power. Now, again, December's a little wonky and it's 1 month, so I'm going to take that 0.5% with a grain of salt and see what we get in January and February. But the trend in the second half of the year for actual FICA withholding, this is not, I'm not talking about, hey, Indeed says there are this many job openings, or, hey, here's what employers think about hiring and how they feel, man. Because, I don't really care what employers feel about hiring. What I care about is how much payroll tax is being withheld, because that tells me how much payroll is actually being paid out and how much the economy can grow on consumer spending. And so if we see a further deceleration from here in the next couple months, buckle up, because we got problems then. If we see this reverse, and hey, this might just be wonky because of, Christmas falling on a Thursday and the pay period lined up this way, and I can buy that and just say, okay, this doesn't matter at all. It's fine. But there's a 6-month trend in place of payroll slowing, and that's something that is, of payroll tax withholding slowing, and that's something that's a little bit concerning to me when I see where we've slowed to now and where that can potentially go in the next couple months. So we'll see where it goes, but this is the actual stuff I'm looking at right now. Quick break. When we return, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a new guide available this month titled Retirement Planning for Spouses. Mike, one of the challenges that spouses face is figuring out how to draw income in retirement, and the way that optimize that income, given potentially multiple Social Security payments, portfolios, pensions? Where's a good place to start?
Yeah, of course, with a married couple, you have increased optionality about where your income comes from, which of course means increased complexity and all sorts of different decisions to be made. But yeah, first of all, you've got your Social Security. Depending on the work history of the couple, right, you might be talking about taking your own benefit. You could be taking benefits based on the working income of your spouse. There's no choice to be made there, but there is a choice to be made in terms of timing. When do we start those benefits? What's the age difference between the two of us? If there's a pension involved, what sort of survivorship benefit do we take? Do we consider life insurance as an alternative to that survivor benefit? And then, of course, your portfolio between Roth, traditional, and taxable brokerage accounts. There's a lot of decisions to be made on that side as well. So it's a lot of decision making to be made, and that's where having a good, firm plan about which income starts at what point based on our own life expectancies and taxes is really important.
Folks, the guide is titled Retirement Planning for Spouses, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, the final trading week of 2025 is starting off in negative territory as traders await a small batch of economic data points due out this shortened holiday week, including Fed meeting minutes and jobless claims. Pending home sales were released earlier this morning. Right now, the Dow is down by 0.4% or 203 points lower. S&P 500 is down 0.3% or 21 points. NASDAQ down nearly 0.5% or 109 points lower. Russell 2000 is off just over 0.5%. 10-year Treasury yield flat at 4.128%, and crude oil up about 2.5% higher today, trading just above $58 a barrel. Shares in Digital Bridge are jumping nearly 10% following news that Japan's SoftBank agreed to buy data center investment firm Digital Bridge for $4 billion as part of its artificial intelligence push. Meanwhile, NVIDIA shares are down almost 2% on the heels of news from last week that the chip and AI giant agreed to buy assets from Grok for $20 billion in cash. Grok is a 9-year-old chip startup that designs high-performance AI chips. The deal marks NVIDIA's largest purchase ever. Elsewhere, the Wall Street Journal is reporting that Lululemon founder Chip Wilson is launching a proxy fight at the athletic apparel retailer in an effort to remake the company's board. As the company searches for a new CEO, Lulu stock is up over 2%. And Disney's Avatar Fire and Ash retained the #1 spot in the domestic box office for a second straight weekend. Avatar and Disney's Zootopia 2 were the two top-performing movies by worldwide ticket sales. Disney shares are edging higher. I'm Tucker Silva, and that is Wall Street Watch. And remember, the Financial Exchange streams every day live on YouTube. Subscribe to our page and follow market activity all morning long. Only here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and hit that subscribe button.
Piece in the Wall Street Journal: in a wild year for markets, investors who did nothing did just fine. Marc, isn't this kind of more often than not, this is how it is? And look, the fact is, about 70% of the time, markets go up in a calendar year. 30% of the time, they don't.
That's right.
And I think even in years like this where you have, big intra-year volatility, the phrase that I tend to like to use, I have two of them. The first is, look, the price of admission to markets, equity markets, is the volatility that you see. And the second one is, look, you can let the market do the worrying for you. If markets are nervous about something, they will sell off. If that nervousness can be resolved, they will go back up. And that's pretty simple. I know investors only want to see their portfolio go up, and they think that they can do that, but the fact is you can't. It's not possible in equity markets. And quite honestly, it's kind of an entitled view to be like, oh, like, equity markets carried my portfolio up by 20% this year, so that's my money. But no, when markets go down, oh, I can't lose that. Like, how much hubris do you need to have to be like, I can participate in the gains, but not the losses of equity markets?
I mean, it's understandable. In retrospect, everything seems explainable and obvious, just like history in retrospect seems obvious.
Sure.
So there's that tendency to read history, stock market history in this case, backwards and think something was inevitable and think that you could detect the pattern in the future. But for complexity reasons, those patterns don't hold up. So market timing, like you said, is really hard. But you made a powerful point when you started talking about this, which is most of the time, on a calendar year basis, stocks go up. It's true monthly too, but the frequency is a little bit more modest. It's like 60-some-odd% of the time, monthly stock returns.
And daily, by the way, it's a 50-50.
It's about 51.49. Yeah. It's about 51.40. And this makes sense when you think about what stocks are. They're your ticket to participating in economic growth. It's how we hitch our wagon to the train of economic growth in terms of investments.
You could also say it's how labor hitches their wagon to capital. It's how you can play on the same team. If you believe the house always wins and the capital always wins, aren't stocks the way that you can hitch your wagon to capital?
They're one way, assuming it's publicly traded companies that benefit from economic growth, which is an assumption underlying what I'm saying here. That seems to be the way things continue to work. But it's not, I wouldn't be too, dogmatic and obnoxious about, by proclaiming that that's the way things are going to continue to work. But all we have is history. That frequency argument you made comes from history. This is why the safest bet, if you're a long-term investor, not if you can't afford to lose, I was going to say 20, 30, 40% of your capital. Those numbers sound scary, but those are sort of typical stock market drawdowns.
Well, and it's also why people typically say, look, if you have money for an emergency fund or for buying a house next year, for whatever it might be that's a short-term need, that money belongs nowhere near the stock market.
Right.
Because the volatility that you see, you don't know when it's going to show up, you don't know how steep it's going to be, and you don't know exactly when it's going to be resolved.
But if somebody puts a metaphorical gun to your head and says, what are stocks going to do today? You know the coin is loaded in stocks' favor, just in terms of the frequency argument, the historical argument. What have stocks done daily, monthly, annually? So you'd be bucking history unless you had a strong conviction going the other way, and we would look at you askance if you said you did, because that would require a crystal ball that, of course, doesn't exist. You would say stocks are going to go up today.
A Palantir, if you will.
Yeah, right. God, those guys. You would say stocks are going to go up today, or stocks are going to go up this month, with no other information. That should be your guess. Just taking if you were a literal empiricist, which is not the best way to approach the world necessarily, but
probably not.
But if you were just being very literal and you were a rank empiricist looking at history, you would say stocks are going to go up today or this month or this year, because historically that's what they've always. Historically, that's the tendency. Excuse me.
Now, you can still have runs within that, just like if you go to a roulette table.
Absolutely.
You say, you go to the roulette table.
Yes.
And, okay, it's basically a 50-50 shot, which, by the way, now is getting worse. I don't know if anyone's been to a casino lately, but roulette tables are adding a 000 now in order to make the house edge even bigger than it already is. So that's fun, because they just can't get, greedy enough to, be
So do you know what that shifts the odds to?
Well, think about it. I mean, if you think about the number of spots on a table and you're adding one more that is in favor of the house, because, again, unless you're betting that, that is a sucker's bet every time, you're probably losing another 1.5 to 2% to the house.
So does it go 30? It's 35 to 1 right now. Is it go 36 to 1? Am I thinking?
No. Payouts are going to be the same. Oh. Because you still have the same number of numbers that are on there.
I've never thought about this carefully enough. Okay, I see what you're saying.
Yeah, so it's again, it adds to the house edge there, because the casinos can't make enough money otherwise, I guess. But in any case, you go to a roulette table, and just because it came up black the last 2 times doesn't mean it's definitively going to be red. 50-50 still means, hey, if you're going through 5 of these in a row, yeah, you have pretty low odds of getting, the same color each time, but it can happen. I mean, I'll tell the story. I was out at the MGM in Springfield about 1.5 years ago, and wildest thing I've ever seen. I'm sitting there, and I'm at the roulette table with a couple buddies. We had been out on like a golfing trip in the area, and we were staying there for the night. And this guy walks up with, I don't know, $30 or something like that, and puts it all on 33. And gets 33. Made it like $1,000 his first minute at the roulette table. And all of us are sitting there, we're like, oh, this guy's crazy. Like, we've all seen this, like, at casinos. We're like, oh, I can't believe that happened. And they, get everything set up for him, and he just keeps it on 33. And again, like, it's, unlikely chance. Like, now you're talking like a 3% of a 3% chance, so you're talking like a 0.09% chance of back-to-back. The guy landed the guy made $30,000 in a span of 2 minutes. I mean, it was actually like 10 just because they had to like count all the money up, because it's like when you're paying out $30,000 of chips, it's kind of a lot. But the guy made $30,000 in 2 minutes because it just happened to be lucky. Now, is that repeatable or investable? No, not in any way, shape, or form. So like weird things can happen at the roulette table, just like weird things can happen in markets. But that's all part of like how the actual odds end up playing out. Like, you don't just get markets going red, black, red, black, red, black from day to day. Sometimes you have 7 days down on the S&P in a row. Sometimes you have 9 days up on the NASDAQ in a row. Like that happens too. But ultimately, this stuff balances out in the long term day to day, and you end up with, pretty close to that 50-50 split.
Now, there are decades like the 2000s when stocks underperform everything, including bonds and cash. Thankfully, they're rare. But if you remember periods like that, again, thankfully they're rare. So if you're not of a certain age, you weren't even investing then. For others of us who were, that's seared in our memory. That reinforces the caveat that you conveyed, which is if you don't have a long enough time frame. I don't know what a long enough time frame is. 7, 10 years, maybe.
10 years.
Yeah. Then don't put whatever that a long enough time frame associated with whatever the goal for that money is. Equities are probably not the right place for it.
And this is before we even get into the fact that what we're saying about U.S. markets does not apply to international ones in any way, shape, or form. The return distribution chart is entirely different if you're looking at European equities. It's entirely different if you're looking at EM. This is not consistent across markets because those markets have different rules by which they play. Sometimes the rules are better, sometimes they're worse, but it's not physics that we are talking about here. It is inherently unpredictable in terms of specific outcomes, but you can map these, outcome distribution charts over different periods and see what you get in different markets. Let's take a quick break. When we return, let's talk a little bit about what's going on in the Boston area as it relates to jobs and housing.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. If you're retired or getting close, now's the perfect time to take a fresh look at your estate plan. Doing your planning early can help you protect your assets and keep more of your wealth in your family. Cushing & Dolan, the leaders in elder law and taxation, have put together a new guide called Balancing Asset Protection and Avoiding Estate Taxes. And in it, you'll learn how to secure your assets if you ever need long-term care, how to avoid having everything tied up in probate, and how to get a clearer picture of your estate tax exposure. The guide also breaks down real options that may help you reduce or even eliminate your estate taxes when you plan the right way and plan early. Whether you have an existing estate plan or starting from scratch, this guide makes it easy to understand what steps could help you and your family in the long run. To get your free copy, call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Piece in the Boston Globe today. It's titled Forever Renters. For many in Greater Boston, the American dream of home ownership no longer exists. And two things are true in my opinion. Right now, home prices in the Boston area are unaffordable for a large number of people who live in the Boston area, and so they may feel this way right now. But I think it is a horrible mistake to extrapolate what's going on right now and say that it is anything permanent. Into evidence, I would like to enter two different things in support of this. The first, Mark, Tucker, actually, can you fire up the Wayback Machine for us? Okay. We don't need to go too far. We're going to head back to late 2020, early 2021. And I remember at this time, this is like peak pandemic. This is when you had the pieces that were being published like, hey, no one's ever going to live in cities again, man, and the Northeast is dead. And, ultimately, what we found is, hey, people like to live in cities because they like to be, close to their other humans and stuff. It's not for everyone. I get that. But there's a reason why cities have existed over time and generally gotten bigger. And it's because people like to be around other people and the services provided by them. And so, that wasn't going to change. And so I think ultimately, I look at that and, those predictions were really bad. The other one, Tucker, can you take us back a little bit further now? I need to go back to 2012, so 8 more years if you could. It's 2012 now. The world is gripped by fears of Grexit and Italy. Remember, this was when, all the pigs were talking. Pigs was Portugal, Italy, Ireland, Greece, and Spain. They were talking about leaving the Eurozone, or rather being booted out of the Eurozone by the better-behaved Germans and French and everything.
Wish they'd done it. Sorry, I know that's not your point.
No, it's fine. I appreciate where you're coming from. In any case, where was I? Oh, here's where I was going with this. This was the time when you had a bunch of people saying, millennials are never going to amount to anything financially. They'll never own homes. Avocado toast eaters, you losers. Like, that was what was going on then. And now you have the pieces being published 10 years, 12 years later being like, oh, you guys actually, did stop hopping around on jobs once you had kids. And yeah, you figured out how to save some money and buy homes. And you're actually buying homes at a greater rate than your parents were. And so, all those prognostications were wrong. So, what I would say to anyone in their 20s and 30s that feels locked out of the Boston housing market, yes, it sucks right now for you. But no, it might not be like this forever, and be open to the idea that the affordability picture on housing can change dramatically in a 3 to 5 year period. And don't give up if you still have dreams of home ownership. Just understand it might take you a little bit longer to get there. But I've seen enough publications of, things that are like, oh, this is how it's going to be for this group, or this is how it's going to be for that one. And most people really overestimate how permanent any shift is. And I suspect this shift of unaffordability is one that's temporary as well, because by its very nature, it's hard for it to be permanent when more and more people can't afford these properties.
When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Magens Bay, or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. There's no passport needed, no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean Paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Now, the other piece to add on this in terms of, hey, how could the worm turn as far as Boston home prices? Boston is a great exporter of two things. And I say exporter not to other countries, but just in general. Boston is a great exporter of two things: seafood and nerds. And specifically, the engine that makes the Massachusetts economy run, and by virtue of that, the New England economy run, because again, it all kind of gets powered by Boston, as much as I hate to admit it. It's just how it is. Without Boston as this, center of economic activity, the rest wouldn't be quite what it is. The fact is, Boston has historically, over the last 100 years or so, been more stable than the rest of the U.S. economy because its main drivers have been education and healthcare. And those are areas that typically are, less susceptible to booms and bust cycles than places like construction. And what we are seeing now is that the labor market for, very highly educated workers, the folks with, the Ph.D.s and multiple MBAs and all that stuff, it's weakening in the Boston area for a number of reasons. And so this is another thing that I come back to. If you are someone without the Ph.D., without, a master's and an MBA and this and that, you've probably, been competing against people with way higher salaries than you for the last, 20 years for housing stock. If the job market for those very highly educated employees is shifting, then, as an example, the family outlined in one of these pieces that, the two of them combined make $175,000, start to become people who are going to be in the driver's seat for buying property in the Boston area once the families making, $400,000 don't exist in the Boston area in the same concentrations anymore. So, we've got that. In any case, let's take a quick break. By the way, $400,000 worth of lobster has disappeared from a Taunton warehouse. Don't know where it is, but it's a lot of lobster. Quick break, hour 2, coming up in a bit.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederickstead comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. If you're retired or getting close, now's the perfect time to take a fresh look at your estate plan. Doing your planning early can help you protect your assets and keep more of your wealth in your family. Cushing & Dolan, the leaders in elder law and taxation, have put together a new guide called Balancing Asset Protection and Avoiding Estate Taxes. And in it, you'll learn how to secure your assets if you ever need long-term care, how to avoid having everything tied up in probate, and how to get a clearer picture of your estate tax exposure. The guide also breaks down real options that may help you reduce or even eliminate your estate taxes when you plan the right way and plan early. Whether you have an existing estate plan or starting from scratch, this guide makes it easy to understand what steps could help you and your family in the long run. To get your free copy, call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Retirement Planning for Spouses. Mike, one of the things that I think is really important to focus on are some of the tax planning items that spouses need to consider basically every single year, especially if there are any kind of age differences between two spouses.
Yeah, real life example here. I was working with somebody recently who spouse just retired, and they were trying to figure out where their income is going to come from this year, and the idea of taking some money out of the IRA came up. And so it was a decision, whose do we take it out of, whose is bigger? And the decision ultimately was, we're going to go with the older spouse here because they are going to commence their required minimum distributions earlier.
And so when you're trying to formulate those decisions, whether it's an RMD that you need to consider or potentially, Roth conversions, it's something where the decisions you make one year can have lasting impacts 10, 20 years down the road, depending on the family.
They most certainly can. Again, when you have a married couple, there's increased options in terms of what to do, but that means increased complexity. Things like the widower's tax when you lose a spouse, especially if there's a big age difference down the road. These are things that you can and should plan for because they can make an immense difference in the success of your retirement strategy.
Folks, the guide is titled Retirement Planning for Spouses, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark Tucker with you here, and as we are winding down the final days of 2025, markets with a very modest pullback today. The S&P is off 29 points, about 0.4%. The Dow was off 217 points, about 0.4%. NASDAQ Composite is off 155 points, about 2/3%. So again, you've got a little bit of a modest downward move here, but nothing huge, especially in the context of the fact that, we were at all-time highs last week, so, let's not get too excited about this. 10-year U.S. Treasury down 1 basis point to 4.124%. The dollar index up 0.03% to 97.725. Gold. Here's where you got some excitement today. Precious metals are, I think the technical word is imploding. This after going parabolic up last week. A good friend of mine who used to work in the trading business once said to me, things that go parabolic up seldom correct by going sideways. That's kind of what we're seeing here in precious metals. Just going down the list, gold's down 4.6%, silver's down 8%, palladium's down 16%, platinum's down 12%. So, yeah, like that whole bucket is just getting bopped on the head repeatedly right now, and it's just kind of not great there. Crude oil, West Texas Intermediate, up $1.48 a barrel to $58.22. AAA national average for gas prices continuing to slide, though. Good news on that front. Down another 0.3 cents to $2.82 5/10. So after spending all year just like bumping between like $3.05 and $3.20 a gallon, we've had some real movement down in the last couple weeks as refinery outages have eased in the Midwest. And so you're at $2.82 5/10 at the moment on the AAA national average for gas prices. A year ago, we were at $3.02 half cent. And so you're down, about 6.5% on gas prices relative to this time last year. Always fun. I filled up yesterday. I was a little giddy. I was like, ooh, like that was nice. I got in and out of here in under, $42. I'm like, man, this is kind of fun. Not as fun as paying nothing for gas, but hey, you'll take what you can get. Piece in the Bloomberg today. 5 reasons to be optimistic about the 2026 economy. So let's talk about what the reasons are that are outlined in here. First, and I think that these are ones that we've talked about generally, consumers going to have more money. This in the form of larger tax rebates that are expected kicking off in, February through May for most filers. So that is something that is, again, not in the works, but going to happen based on the tax code changes that were made earlier this year. So I think that is, a big piece. Businesses also going to have more money to spend through some additional depreciation that they can go through, and that'll hopefully boost CapEx as we get into next year. The other ones in here, I think, are not ones that I would classify as certain by any means. The first one here, interest rates will be lower. I don't know how you can say that with any kind of confidence. The Fed may decide to move short-term interest rates lower. There is no guarantee that moves longer-term interest rates lower. As we've seen the last 2 years, by the way, the Fed has embarked in cutting cycles each of the last 2 falls, and you have not seen long-term rates move down. So I don't think those facts are in evidence. Next one, energy could be cheaper. Well, it could be. It was this year, and that's a big boost for all of us who don't work in the oil industry. But I don't know if energy is going to be cheaper next year. Do you?
I do not.
No. So, it's a maybe, but I don't know how you can say that one definitively. And there will be more certainty on tariffs. Maybe, but again, I don't know how you can say that definitively, given how the tariffs have evolved over the entirety of the course of this calendar year.
Yeah. All these facts could be true. They're not facts. All of these...
2 of them are.
Yeah, okay. All these things could be true. The economy could still dip into recession. You just don't know. The safest bet, like with respect to stocks that we talked about in the last hour, most of the time the economy grows, and it's not a coincidence that most of the time, when I say most of the time, I mean most calendar years, not coincidentally, stocks go up most of the time because they're tied to economic growth. So a safe bet would be, the economy is going to grow at about its trend rate next year.
If you want to look for other areas where you can be optimistic, like other things that, again, may happen but are not certain to. The 2 that I would look at are housing and the labor market. Housing, what do you want to see? you want to see a higher volume of transactions happening, because even if you are seeing builders being pressured by lower pricing throughout the southern and western part of the country, transaction volume can help to generate more activity, even in the absence of construction. It's not quite the same. Again, there's a lot more activity that happens building a $400,000 house than selling one. But even when you sell a $400,000 house, think of what happens in terms of the equity that's unlocked there. Assuming that you pay regular broker commissions, call it 5%, $20,000 of that equity goes out to the brokers to go and spend in their local communities then. You might be hiring movers. Maybe that costs, whether it's, a small move and it's, $800, whether it's a big move and it's $5,000. Hey, that's money that's going out to support, businesses in the local community. You might be doing remodeling. That helps contractors that aren't building new homes, but they can still, do the remodeling work. You might be doing landscaping. You might be buying new furniture, all that stuff. So higher volumes can make up for some of the dip in activity related to construction. And so I think that's somewhere that you can potentially be optimistic, because higher inventories, which we have now relative to a year ago, tend to lead to higher transaction volumes. Inventory leads sales. Other things, consumer spending has not fallen off a cliff. In fact, it's been remarkably consistent this year, generally running about 4 to 6% growth year over year. Generally, the labor market doesn't fall apart unless demand does, and so as long as consumers keep spending 4 to 6% more than the prior year, it makes it harder for that labor market to fall off a cliff. That's optimistic, right? Like, taking the bad things off the table is optimistic. Am I wrong?
No, I think, again, a safe assumption is that the economy will do next year more or less what it did this year. Big discontinuities going from reasonably strong growth, which we've had the past couple of quarters, to negative growth. Those absent big shocks, which are, of course, unpredictable, so that's not a very helpful qualifier. Absent big shocks, the economy tends to continue to do what it's been doing. A good predictor of next quarter's, say, GDP growth, which is the most widely cited measure of the state of the economy. Best predictor is the past quarter's growth. You could put the term spread in there and maybe improve your model a little bit if you're into that type of thing. But for most of us, just look at what the economy's been doing, assume it'll continue to do that, unless something hits it and throws it off track. That's not a very helpful guideline, but it is a reasonably good forecasting rule.
Let's take a quick break here. When we return, we're going to do a little bit of trivia, and then we're talking Michael Burry after this.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. If you're retired or getting close, now's the perfect time to take a fresh look at your estate plan. Doing your planning early can help you protect your assets and keep more of your wealth in your family. Cushing & Dolan, the leaders in elder law and taxation, have put together a new guide called Balancing Asset Protection and Avoiding Estate Taxes. And in it, you'll learn how to secure your assets if you ever need long-term care, how to avoid having everything tied up in probate, and how to get a clearer picture of your estate tax exposure. The guide also breaks down real options that may help you reduce or even eliminate your estate taxes when you plan the right way and plan early. Whether you have an existing estate plan or starting from scratch, this guide makes it easy to understand what steps could help you and your family in the long run. To get your free copy, call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The Armstrong Advisory Group understands retirement planning. And when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. If you didn't have a chance to participate in this year's race but would still like to support our great American heroes, please visit dav5k.boston. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston. Time for trivia here on the Financial Exchange. And on this day, in 1845, Texas was admitted as the 28th state of the United States. 1 year later, the 29th state was admitted to the country. So, trivia question today. What was the 29th state admitted to the U.S.? Hint, it's in the Midwest. Once again, what was the 29th state admitted to the U.S.? Be the second person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the second correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Piece in the Wall Street Journal, Michael Burry bets that he isn't too early to go against the AI juggernaut. Should other humans care? Look, here's the thing. Burry, smart dude. Made more money in a single year than I'll ever make in my lifetime at one point. I don't know why we have to document his every move. It's not like he's always right. It's not like he is, consistently someone who accurately predicts market movements. He had one monster bet that paid out in his favor. By the way, after 3 or 4 years leading up to that, where his hedge fund was hemorrhaging investors because his bets weren't paying off. And so I don't know why he really gets lionized as, some kind of, read on exactly what's going to happen in the market, other than people know the name because, his character was used in The Big Short.
Yeah, none of this is helpful to an individual investor. I don't think. He's not really an investor. He's speculating. An investor puts their capital in a generative asset for the long term. It's what we do in our day jobs. It's what pension funds do. It's what you do if you have a 401k and you're in a target date fund that reallocates automatically as you age and rebalances automatically to keep your mix in line with your goals. That's how most people should approach investing. Are stocks expensive? Well, objectively, yes, they are. By expensive, we mean, is their price high relative to past 12 months earnings or a longer period of earnings? If you like one of those smoothed measures, stocks are undeniably very expensive. And historically, that's portended low returns. Just like when any asset gets too expensive, your yield goes down because it's the reciprocal of that. You flip it. So stocks are objectively expensive. Does that mean they're going to crash? No. Could earnings growth speed up because of all of this artificial intelligence investment that should make its way into productivity? Maybe it did last quarter when unemployment went up and growth went up. Very unusual coincidence there. We don't know. Should we be betting against individual companies the way he is? It's alluring because these companies seem to be pricing in ridiculously high levels of growth, but who knows?
Yeah, and so again, I don't get needing to follow like famous investors' every moves. It doesn't do it for me.
But the stock market would be boring without that. Is it? I mean, think of your
it's
target
pretty
date
exciting,
fund.
I think. I mean, like,
no, I mean for most of us as investors, though, who use a target date fund or something like it, you're supposed to set it, forget it, and then in 30 years you start to cash out. And historically, that's worked. That's what I mean.
That seems pretty exciting to me.
Yeah, it is, but it's like watching paint dry, which after
I like that too.
You just like the smell. You just like the fumes.
No, I enjoy watching it. There actually is something cool about watching it dry. Like, have you ever actually watched paint dry?
No, how do you? Like a time lapse film or something?
No, so honestly, like I've painted like a decent number of rooms, like at one point or another in my life, and the cool thing about it is, like, quite honestly, it dries a different color than when you originally painted it. And I don't know, like I find the whole process.
The only reason I'm
fun.
interested is because I want to know when I can put the second coat on and get on with my day.
Yeah, I do that too.
Yeah,
I love painting personally. Like, there's just something very zen about it. It's just like, as long as you have time, it's just okay. It's like mowing the lawn.
Most people would consider that to be, after a while, sort of boring. And investing should be boring too. You make your deferral every couple of weeks. Stocks do hopefully what they've done historically going forward. And I don't mean the same percentage return. I just mean grow with the economy.
Sure.
That could be 5% going forward. It could be 6, 7, 8. It'll probably be more than bonds. The whole industry of financial services is kind of founded on that
kind of based on
proposition.
That, yeah.
If that doesn't work out over a very long period of time, we're in trouble. But the Burry infatuation, like the Peter Lynch infatuation, the Warren Buffett infatuation, they make what would otherwise be watching paint dry a little sexier, maybe. That's sort of my theory. Otherwise, most of us can't.
You don't think the market's like exciting without?
Not particularly. I just see numbers move. I see rates, and no, I don't. It doesn't.
Interesting.
Well, like exciting. It's good to make. It's good to be a successful long term. To be a disciplined, not successful, because we're all just along for the ride. But I don't think I don't find the day to day movements. I find them interesting sometimes. Like, oh wow, that's an anomaly. That's the frequency of that is small historically.
That's the stuff I mean. Like, I mean,
okay, then I
how
guess
can you look at this year in markets and say like it hasn't been exciting? We've seen some stuff this year. Like I don't need like Michael Burry saying like AI is a bubble to feel like we've seen some stuff this year. I mean, we had like one of the fastest 20% drawdowns in history in March and April.
Yeah,
and then we had an unprecedented run of a lack of volatility in the 6 months after that. Like one of the calmest 6-month market periods in history after that. Even just in the last like couple of weeks, you saw precious metals go parabolic up and now they're, kind of going parabolic down. Like there's some wild stuff that's happening.
I never know what to make of that, which is why I get a little less excited maybe than I should, given that, my job depends on it.
Maybe it's better that you don't get excited.
Possibly.
It's like you don't want the surgeon being like, ooh, look at this. Like you just want to be
that's
like,
a big tumor.
Right, you just want to be like,
sorry, that's a tasteless.
Yeah, and you just want to be like, oh, like let me go do my job.
Although a
like,
surgeon
I've seen
probably
this
does
before.
think that they just don't convey it. Like, wow, that's in really bad shape.
Well, right. Even as I talk about like, hey, this market's exciting, ultimately I look at it and I say, okay, this is what you want to do in conditions X, Y, and Z. Like, there's a job to do.
Yeah, I just want 8 to 10% real returns and call it a day. But that's, as you pointed out, you get you get a lot of volatility.
Go away for 40 years and,
That's my ideal sort of state of existence, yeah.
Yeah.
Set it, forget it.
Sitting on a beach somewhere while the compounding happens for you.
Yeah, let it work for you, which is what we all really do, which is what you do
It's
in
true.
your 401k. You put your money in every 2 weeks. You don't really think about it.
Yeah. So that's what we've got going on there. Be prepared to keep paying more for electricity. That sucks.
Schrager didn't hit that in her column. She
no, this is a piece
sort
of the Wall
hinted
Street
at
Journal.
No, I know, but
yeah.
this is an example of.
So yeah, you've got
contrary themes.
average residential electricity rates have risen 4.9% this year, according to the DOE. The data from the CPI, I think, is a touch hotter than that. I think it's closer to like 6% year over year. And DOE expects that electricity rates are going to rise another 4% next year. But no one has any idea because unless you know how much the input commodities are going to cost, you don't know how much electricity rates are going to go up.
Yeah, the demand component is another variable, maybe a little less harder to forecast.
Yeah, I mean, again, aside from the data center piece, everything else moves pretty predictably because we only build out so much capacity each year. We only have the population grow so much each year. There's only so many homes built each year. Like you can predict the demand, I think, pretty easily just because it doesn't wiggle too much. The supply thing is where I think the questions are, and unfortunately, that's going to be where they continue to be. Let's take a quick break. When we come back, we get the trivia answer in Wall Street Watch next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up. Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederickstead comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
The Armstrong Advisory Group understands retirement planning. And when it comes to married couples, it can be about more than money. money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there are some high net worth clients that would like to reduce the size of their estate, but they don't want to give up access to their assets. Is there anything they can do?
There certainly is, folks. So this is a combination of things. One, you obviously want to do your basic estate planning first. Get your foundation in place, the basic revocable trust planning to help utilize whatever exemptions you don't use up through gifting. Now, when we talk about reducing the estate, we are talking about gifting. But as you said, they don't want to lose control. So there are these special trusts that are designed called spousal lifetime access trusts, where in essence, you use an LLC to keep control of the investments, manage the investments, and make distributions. And then the non-voting shares get put into these irrevocable trusts where you have each other's spouse has access to the assets. So there's a way of getting the assets into those irrevocable trusts, which are now growing outside of your estate tax free, while at the same time working together to keep control and use what's in those trusts.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide called Balancing Asset Protection and Avoiding Estate Taxes by calling 866-848-5699. That's 866-848-5699. Or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, the final trading week of 2025 is upon us, and markets are pulling back slightly as investors await a small batch of economic data points due out this shortened week, including Fed meeting minutes and jobless claims. We saw pending home sales posted earlier this morning. Right now, the Dow is down about 0.5% or 227 points. S&P 500 down nearly 0.5% or 30 points lower. NASDAQ down by 0.6% or 146 points. Russell 2000 is down 0.2%. 10-year Treasury yield down 1 basis point at 4.116%, and crude oil up about 2.5%, trading just above $58 a barrel. Japan SoftBank agreed to buy data center investment firm DigitalBridge for $4 billion as part of its artificial intelligence push. Shares in DigitalBridge are up over 9%. Meanwhile, NVIDIA shares are down almost 2% on the heels of news from last week that the chip and AI giant agreed to buy assets from Grok for $20 billion in cash. Grok is a 9-year-old chip startup that designs high-performance AI chips. The deal marks NVIDIA's largest purchase ever. Elsewhere, the Wall Street Journal is reporting that Lululemon founder Chip Wilson is launching a proxy fight at the athletic apparel retailer in an effort to remake the company's board as the company searches for a new CEO. Lulu stock is up nearly 1%. And Disney's Avatar, Fire and Ash retained the #1 spot in the domestic box office for a second straight weekend. Avatar and Disney's Zootopia 2 were the two top-performing movies by worldwide ticket sales. Disney shares edging higher so far today. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question. What was the 29th state admitted to the U.S.? That would be Iowa. Chris from Melrose, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Chris. We play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Can we just talk about that Avatar movie briefly?
Are you an Avatar guy?
No.
Yeah, I'm not either.
I'm not. I saw the first one, and quite honestly, I saw the first one, I think, twice in theaters, just because at the time I was like, the visuals were mind-blowing. I was like, this is just, like, really cool.
I haven't seen 1 second of any of that franchise.
I haven't seen either of the next two, and I think that's how basically most people are in the United States, because here's the really interesting thing, is when you look at the data on these three movies. The first one came out in 2009. The gross that it brought in worldwide was like $2.9 billion, which is just an insane amount of money, especially in 2009 dollars. Remember, like that's, quite a bit of inflation ago. The second one brought in $2.3 billion, and about 700 of that was domestic. The first one, about 800 of that was domestic. This one right now has not yet been fully released internationally, but it's tracking about the same. About 28% domestic, 200 million so far, 540 million international. So the thing's done $760 million worldwide at this point. And this is why, like, despite people in the U.S. kind of being like, James Cameron, like, what are you doing? Like, why do you keep releasing these movies? Like, we're just not, like, as interested as we used to be. The fact is, the international box office is what it's all about for these. Even if this movie costs, several $100 million to make, when it ends up grossing $1.6 to $2 billion worldwide, okay, like, yeah, they're going to be perfectly fine letting James Cameron do whatever he wants to do as long as he keeps printing $2 billion for them. So I know that, like, I look at this and I'm like, man, it's a 3-hour and 17-minute movie that I just, like, am not interested in seeing. And I get it. Like, that's kind of what the data is showing domestically. But worldwide, it's still going to churn out, $1.5 billion in international revenue, and they'll be perfectly happy to keep, underwriting whatever James Cameron wants to do for, the remainder of his career.
Yeah, it's a little bit of a paradox. It's like this movie, nobody's ever seen it, and people that nobody's seen it, and those that have seen it, some rave, but most.
I have a couple friends who have, like, they got dragged by a friend or family member, and they're kind of like, not for me. Like,
so that's what I mean by it's both something nobody's seen, and those who have seen, I'm contradicting myself a little bit there, but those who have seen were not particularly moved by it. Also wildly successful. It's like some of these podcasts.
This place is too crowded. Nobody goes there anymore.
There you go. Yeah, exactly. So it's one of those types of paradoxes. It's like these wildly successful podcasters, Joe Rogan or whomever. Nobody listens to them, or very few do, proportionally speaking. Wildly successful, paid hundreds of millions of dollars a year. It shows the power of digital media and modern distribution channels for, I'll just say, art. It's expanded the audience by billions in the case of movies, and podcasters too, of people.
The wild thing about James Cameron is, like, just if you look at his career and what he's done, like, he basically almost never releases anything, but when he does, it's usually something pretty important. Like, you kind of, like, go through the list, and, like, his first couple things were, again, I've never seen them, so I don't know anything about them, but his first thing was a film called Xenogenesis back in 1978. Have either of you heard of it?
No.
I haven't. Then he finally got big in 84 with Terminator. Like, revolutionary movie that, like, changed basically, like, along with Die Hard, basically changed how action movies are made. Comes out, the next year. Again, he didn't direct Rambo First Blood. I think he was just a producer on it, or maybe a writer. Then he comes out 2 years later with Aliens, the sequel to Alien. Like, wasn't even his own original IP, but gets pulled in for the second one there. Takes a few years off, does The Abyss, spends a bunch of time, like, working on the technology to be able to make it. The reason Adobe Photoshop exists today is because James Cameron had to literally make the technology in order to be able to get like the visual effects he wanted in the abyss into the abyss.
Oh, I guess it was worth it.
You know, then Terminator 2, Judgment Day, True Lies, and then comes out with Titanic. So he basically has like 6-7 movies over like 25 years, like doesn't produce a ton, then goes and takes, I think, 12 years off between Titanic and Avatar. Not off, but like he's working on it, and then just has done 3 Avatar movies in the last 16 years. So the thing about James Cameron is, aside from a couple of these movies that like completely changed the game, you look at the rest of his career and you're kind of like, it's kind of forgettable, but like every 10 years or so he does something that completely pushes the technology and the genre forward, which I think is just kind of interesting. Folks, the Armstrong Advisory Group has a guide available this month. It's titled Retirement Planning for Spouses. And this gets at some of the planning considerations if you happen to be married. And there's only a couple days left in the month, and so only a couple days left for you to request this guide. But it goes through questions about Social Security claiming and coordination of those benefits. How do you address health care for both spouses, especially if there's an age difference at retirement? How do you make sure that you're getting the most out of a health care plan at the lowest possible cost? Long-term care planning. When do you address those strategies, and how are the best ways for you to think about those topics? All that and more is in this guide titled Retirement Planning for Spouses. And again, it's December 29th right now, so, you know, you're basically at the end of the month. I mean, let's be honest, no one does anything on the 31st. So, if you're going to request the guide, this is the time to do so. How do you request it? 2 ways. Number 1, you can call 800-393-4001. Number 2, you can go to armstrongadvisory.com and request it there. Again, the guide is titled Retirement Planning for Spouses. Basically getting to, the last couple days you can request it, and it's available at armstrongadvisory.com or by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Piece in the Wall Street Journal, tech that will change your life in 2026. What sounds exciting to you in here, Mark? Robots?
I'm thrilled with the idea because I'm in my 50s thinking about how will I live. A lot of people, I suppose, as they reach middle age and realize you can't do what you used to do, wonder when, and I'm interested in robots, not so that I could play chess with them or so they can fold shirts, but just carry something heavy up the stairs. Help me shovel the drive. This doesn't have to be a particularly bright robot, just capable of doing grunt work.
Sure.
And I wonder why.
Do the dishes.
Yeah, screw doing the dishes. I mean, even a frail, feeble person can.
I like doing the dishes.
Oh, God.
No, but
I did so many dishes yesterday.
Yeah, but wouldn't you agree that doing the dishes is probably not top 5 things I need to do to continue to live independently?
Yes.
But taking the shopping up the stairs or out of the car, this is grunt work. I don't need a sophisticated robot that can quote Hamlet Act 2, Scene 3 while playing Connect 4 and walking my dog and all this stuff that engineers think is on the frontier.
So you don't want a companion through the robot?
Don't buy me a companion
Yes.
robot.
Yes.
But I do need something to help
grunt.
me. I want to carry a 90-pound bag of cement.
Why 90? Why stop there?
That's the quantity, I think. That's a standard quantity.
What about 3 90-pound bags?
I don't want a robot quite that strong.
Because you don't want it to hurt you.
But I think, and it will eventually get annoyed with me and try to break my neck.
Mark, you have asked me that for the last time. Yeah, Stop asking me how fast GDP is growing, Mark. I'm not interested.
I don't even need it to talk, but I need it to carry stuff, including, me up the stairs at some point.
Sure.
Imagine if your back goes and you can't make it up the stairs. So, related issue, are we aiming too high with AI-infused robots?
Do I think we are?
Yeah.
No.
You've heard about what they are apparently struggling with. Like, this robot can't gift wrap a package. Well, what the hell? I can gift wrap a package, and hopefully I'll be able to do that even if I only have a couple of working fingers. But I can't carry the laundry basket or the package up the stairs.
I think the average person is dramatically underestimating what robots are going to be able to do in the next 3 to 5 years. not overestimating. I think because I think most people like hear the stuff about like, oh, like it can't even do this, it can't even. This is like first generation stuff. You know, like the Ford Model T couldn't do a lot of things either.
Yeah, right.
And,
that's true.
You know,
where's the sunroof?
You know, and
actually, it did have a great sunroof.
It did.
It had no roof.
You know, but like there were some real problems with the first cars, and then you give
but they were functional though.
So were the first robots.
Yeah, right.
You know,
so are we asking too much of so-called humanoid personal assistant type robots?
No. If you want my prediction, I think we are over. Here's where I'll land. Actually, I think we're overestimating what large language models are going to be able to do 5 years from now relative to robots. I think we're going to actually find that 5 years from now, there's more progression on robots that can do physical things than ones that can do verbal
great. That's
and
what
writing
I'm
things.
Advocating for. That's what I'm hoping for.
Because I think we're getting towards the commoditization and the limits of the transformer-based large language model. And I don't think we're anywhere near that on robots that can actually pick things up and put them down.
That's all I needed to hear.
That's where I think we're going. Quick break here. When we come back, we got Stack Roulette.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederickstead comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
At Armstrong Advisory Group, we understand that retirement planning for couples is about making smart, coordinated decisions that support both partners. Hi, this is Chuck Zodda. We've got a brand new free guide called Retirement Planning for Spouses that focuses on key financial moves that every couple should understand, like how to time your Social Security benefits, how to prepare for healthcare expenses and long-term care needs, and how to manage your investment withdrawals in a way that keeps taxes under control while still maintaining the lifestyle that you want. Retirement is a team effort, and this guide may show you how to make the numbers work for both of you. Call us right now at 800-393-4001 to get your free copy of our new guide called Retirement Planning for Spouses. That's 800-393-4001, or you can request it online, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. There's still time to book your holiday vacation to St. Croix, St. Thomas, or St. John. Enjoy one or all three, and if you act fast, you could be in St. Croix to experience their Crucian Christmas Festival, taking place this December through early January. Discover the magic of this long-standing tradition with incredible food, music, and entertainment, or just go soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your winter escape now at visit usvi.com. That's visit usvi.com.
What you got for me, Mark?
Financial Times makes a good argument for diversification, not just domestically, but considering the global opportunity set. The headline from the Times, U.S. stocks eclipsed by rest of world in 2025. A little bit jarring at first. Stocks are up nearly 20% as measured by the S&P 500 index, but not as much as international stock indices. The Financial Times points out that the All-Country World Index, maintained by Morgan Stanley Capital, the MSCI All-Country World Index, you may have this option in your 401k plan, so that might kind of ring a bell, is up about 30%.
Not the index, because investors cannot invest in the index.
Yeah, an index tracking mutual fund or exchange-traded fund. Right. Indices are designed to be investable, but you can't actually buy them from MSCI or S&P or Russell or whomever. A lot of the global market, ex-US, now is up about 30%. And a lot of that comes from the decline of the dollar relative to, not all of it, but a lot of it comes from the decline of the dollar relative to foreign currencies. So it's a nice little reminder that a long-term investor who's comfortable with equity risk should look abroad a little bit too. And most target date funds, which invest in a wide variety of assets on your behalf, do that for you.
Got a piece from CNBC. 31-year-old scoops ice cream on the side for $16.50 an hour to make ends meet in this job market. There's zero shame in it. I guess my question on this is, why is this news? You know, I look at it and I think about it, and I remember when I was a kid growing up, and again, when you're like 7, 8 years old, you don't understand how this stuff works, but I remember that my dad took a job at a toy retailer one year. And I don't know exactly how long he was there. My recollection is it was maybe like 6 to 18 months, like something along those lines. But, you know, you get older and, like, you talk to him as you get older. And, like, after the fact, it's like, oh, like, yeah, Dad had lost his job and needed to figure out how to, keep food on the table. And so he went to work, at a toy retailer for, somewhere in the ballpark of a year in order to make ends meet. And, like, my assumption, I guess, has been embedded in me since then was, yes, like, you have to do what you have to do in order to make ends meet. I don't really think that someone, a 31-year-old scooping ice cream is newsworthy, because I guess I always just viewed it as, okay, if you lose your job and need to figure out how to pay the rent, then you go and get another job and figure out how to pay the rent. And that's kind of just been an assumption for me, I guess.
Did you see the story, and I want to bring up the context because it's not important here, but there's a story in our stack today about a grown man who's on food assistance. I don't want to bring up the context. I don't want to besmirch him.
Sure.
It's not really about that. But my first reaction was, oh, that's too bad. He's highly educated, can't find a good fit. But why aren't you working at Target for the holiday season?
Right.
Why are you taking food stamps that are intended for single moms and elderly, impoverished, and others who can't go to work, who probably want to? This is kind of related, Chuck, to the do what you got to do mentality that you clearly got from your dad.
You just kind of have to figure it out. So I don't think it's should be newsworthy that someone's picking up shifts on the side in order to make ends meet. Like, that's, I don't know. Like, I still remember when I graduated from college, like, again, it was like the middle of the financial crisis. Like, there weren't really great jobs. I was like, okay, what am I going to do? I worked a bunch of sports camps and stuff that summer in order to make ends meet. And I was fortunate enough that shortly after the end of the summer, I started, work at, a more permanent, job and everything. But yeah, for, 6-7 months, it was kind of like, all right, you got to figure it out. Like, it's, it is what it is. Let's take a quick break here for the rest of the day. But we're going to be back here to continue finishing up the year tomorrow, right here on the Financial Exchange.